like I said, sometimes it's not even specific. They can't quantify why they don't want to accept the VA offer, or why they're weary of the VA loan program or whatever. Um, but that is one of the more common ones, I think, as well. It's harder. It takes longer.
Yeah.
Yeah.
Service members should get the most out of their VA benefits for homeownership. That's our belief, and that's why we're here. So whether you're looking to own your dream home, considering refinancing, or just exploring the VA home loan process, you've come to the right place. Welcome to Helping Heroes Become Homeowners. What misconceptions are you still hearing about your VA home loan offer? What's your plan B if that offer doesn't get accepted? Hi, this is Richard Sarey with Alliance Mortgage Group, and this is our next episode of Helping Heroes Become Homeowners. So today I have Mr. Ryan Gibson, our new loan officer with Alliance Mortgage Group. Welcome on today, Ryan.
Thank you, sir. I'm happy to be here. Happy to be with you again.
Absolutely.
Too.
So you've been in lending now for how long? Tell us a little bit about yourself.
Man, so I started at Countrywide Home Loans back in 1998 when I was still going to school. And I actually started they brought me into their collections department and taught me how to hound people when they didn't make their payment on time. And I hated it. But I wasn't there very long. It was like a little refi boom, if I remember right, back in, well, I did in training, whatever. I want to say it was 2000. I jumped over to the origination side. And honestly, I didn't know anything about it. But the guy, he needed bodies. They were getting busier and busier. Said he'd train me, and I did it. So I started working, originating in 2000, and that's all I've ever done. I've done it for big banks, little banks, lenders, and now I'm in the capacity I'm in now as a broker.
Nice. So you've touched every type of way a loan can be put together, retail wise, bank wise, and now wholesale.
Yeah, I mean, that said, as you know, as soon as you think you've seen everything, you get something you've never seen. But yeah, I think I've done it pretty much every way you can do it.
So we want to talk a little bit about, because I've been hearing a lot more misconceptions that, in my mind, really thought that those misconceptions were gone. But, for the VA home loan, the misconception theory out there, some things just aren't true. And that's one thing that, I've taken upon myself to be an advocate of. And trying to educate as many realtors as I can about the benefits of this product. What have you been hearing out there? You're in Van Alstyne. What are some of the things that you're hearing from a misconception standpoint?
I mean, you hear stuff all the time. There's general things, general feelings where they can't even quantify why they're fearful of the VA loan or the VA buyer. Mm-hmm. They just know they probably would rather work with a conventional or FHA buyer. And that just goes to tell you or show you that some of the stuff they can't even quantify why. They just have heard, whatever they think they've heard or whatever. But more specifically, you hear people that think it takes longer to do a VA loan, or that the seller is going to have expenses that they wouldn't otherwise have if they accepted an FHA or conventional or USDA offer or whatever. Or I was talking to my dad last week because he's maybe in the market to buy soon. And we talked about maybe using the VA, and he thought that he couldn't use it because he bought his first house in the 70s or whatever using the VA, and that it was a one-time use thing. So those are the general, I think, reasons. People are fearful that the appraiser is tougher on the house, and that might create problems. I think those are the main things that I've heard. People are worried about the VA.
So with the VA home loan, you can use that VA home loan multiple times as long as you've got enough entitlement on the loan, because sometimes you're going to have bonus entitlement based on where your next house is going to be without having to restore that loan. So the bonus entitlement comes into play. Now, if you still have some entitlement remaining and you may have to put a little bit of money down, it's still advantageous to do that loan because you're not going to have MI on the property, even though you may have to put some money down. But yeah, you can use that loan multiple times as long as you have enough entitlement. It's not a one-time thing.
You can even be in a VA home loan in a house and buy another house and use the VA again without selling the previous.
Correct. As long as you have enough entitlement remaining.
Yeah. Yeah.
Mm-hmm. Now, if you want to restore that if you need that extra entitlement, then you would just have to refinance that loan out of the VA home loan. Or if you happen to be married to another veteran, you could just put that entitlement on that veteran's name and get the full entitlement without having to worry about it. So there are options out there.
Yep.
The first VA loan that I did, that was one of the misconceptions. I didn't know. 15, 16 years ago when I did my first VA home loan, in my mind, I heard use it once and you're done. You can't use it again. So, learning that way back when, that has always stuck, that, you can use it more than once, and you can use and build wealth with it. It's a very good product to do that. You just use it strategically.
Yeah. And then one thing that I ran into that I either forgot or I didn't know or whatever, but I had a deal where it was boyfriend, girlfriend. They weren't married. He was a veteran. She was not. They were wanting to buy a house together.
Mm-hmm.
You can still use the VA even in that scenario. You're going to have, 12.5%?
Yeah, the non-veteran has to pick up the percentage that the VA is not going to guarantee, and that's typically about that percentage.
Yeah, okay.
So it can work. Now, in the past, you'd have to send it up to VA for approval on that, but now they've given that authority to the underwriter. And if they do still want to send it up to VA, they can send up electronically what the VA wants to review. But for the most part, it can be done. But again, if they don't have the funds to do that, then you'd have to go into a different avenue. But if they did, it would make sense because you're not going to have that mortgage insurance payment.
Yeah. And
you're going to get a more competitive interest rate.
Yeah.
Than conventional or FHA based on what kind of credit score you're looking at.
Yep. Yeah.
Now you also mentioned something about appraisal concerns. What type of concerns are realtors saying out there about that?
I don't know that I have anything real specific, but I know I've heard concerns, or we don't want to accept this VA offer over this conventional offer because they're more like an inspection and they cause problems on the transaction. And it's just safer to take the conventional offer or a different offer than to take the VA offer.
Right. So when an appraiser goes after, that appraiser is also extra certified, so to speak, to be on a VA panel. So they've got to go through some additional things to get that certification. But when you have one appraiser to another doing VA and conventional, they're going to use the same information, right? What the VA appraiser is making sure of is that it's sound, safe, and secure. So if you've got problems with the home on a conventional side when it comes to foundation, it's going to be the same issue on a VA appraisal. So, the differences between the misconception of that, I think, really comes down to, in their mind, realtors think the value is going to be less than a conventional appraisal. And that's just not true. Now, the good thing about that, though, is that if you do a VA home loan, you have two options to contest it or rebut the value. Conventional, it's a one and done. So with that, you can, first of all, the appraiser is going to send out a tidewater to the person who placed the order. The tidewater tells both parties, hey, we're not getting the purchase price. I need some more data. I need some more comps. So we have to give the appraiser within 48 hours additional data to justify the list price. If realtors don't accommodate that information, then he's just going to send that appraisal through the portal, and we're going to pull it down. The value is what it is. However, we can still rebut that. We can do a reconsideration of value. We have to have the veteran has to initiate that. They have to give us an explanation letter and tell us, what they think the house is worth. And still have to provide the data, but we can send that up and have that reviewed and see what happens from there. But from a conventional standpoint, it's a one and done. You send comps to the appraiser or the management company, they review, they yay or nay it, and then if they nay it, you're done, right? Yeah. So VA does give you a couple more options, or at least one more option to try and get that to list price.
Or just flexibility in general if there is any questions around making value.
And I think the best practices that I do on that, if I know, if they're going to put in an offer and the realtor who's representing the buyer, they may have some concerns when they walk the property. If the concerns are cosmetic, I'm not concerned with that.
Yeah.
Because they meet the minimum property requirements on the appraisal, the cosmetic stuff, not concerned. But you've got cracks in the wall, you've got leaking roof, you've got peeling of paint, you've got, I don't know, you've got drainage problems that could cause foundation problems. That might be something to be addressed. But for the most part, if it's safe, sound, and secure, it's going to pass all day long.
Yep.
Nothing different.
Yep.
So you've got a list of some other questions of misconceptions that you and I have been talking about for about a week or so. You want to address some of those questions?
Well, we talked about the misconception that a VA loan takes longer than FHA or conventional. We don't want to, we need a quick turn time. So that's another reason we don't want to use the VA. And that's probably, like I said, sometimes it's not even specific. They can't quantify why they don't want to accept the VA offer, or why they're weary of the VA loan program or whatever. But that is one of the more common ones, I think, as well. It's harder. It takes longer.
Yeah. And here's, when you have the misconceptions that you're speaking of, it's from lack of doing those types of loans from a realtor perspective. I'm doing some training on getting a realtor's license. And when I went through the process, a small chapter on mortgage and a snippet about VA home loans and a huge chunk of information about conventional and a snippet of FHA. So even from the education aspect of it, it really doesn't dive in deep.
Yeah.
But from a closing perspective, VA has become better automated than it has in the past. We've done VA loans in 7-10 days. Now you do have at least 10 days sometimes, depending on the appraisal turn time, but they have 10 days to get that order back to you from the date they accept it. So between now and then and everything being automated, everything being paperless, it's more than likely going to get that loan done just as quick as a conventional loan or an FHA loan, or even faster. So it depends on who you're working with and what your loan officer is asking for up front.
Well, and it's really, when you get the call from the realtor, hey, Ryan, hey, Rich, whatever, we're going to make an offer tonight, but to be competitive, we need to close in, 3 weeks. Is that something you can do? Regardless of whether it's conventional, FHA, VA, we're going to tell that realtor the same thing. And that is, absolutely, we can get it done, but we need to make sure that client is all in. When we ask for the things we ask for, W-2s, pay stubs, it's going to be the same no matter what loan product we're using. We need to make sure they get us those things. If they do their part, we can do our part. We can get it done in however quick we need to get it done for the most part, whether it's VA or not.
The only thing that goes sideways on that deal, or any deal for that matter, would be the appraisal value.
Yeah.
Because if you run into that situation on a conventional or an FHA and you want to rebut, you're going to lose a few days on the rebuttal time, and then you're going to have a few days to renegotiate if you have to. But for the most part, like I said, we've done them 5, 7, 10 days from CTC, from application to CTC. It also depends on whether or not that appraiser is going to get it out there in a timely manner and where that property is located. If it's located in, a rural area, we got to give that appraiser a few more days than 10 days.
Maybe a few more dollars.
And he'll tell us that he's going to need a few more extra days to meet that requirement.
Yeah. Yeah. In short,
what about interest rate? Have you heard any differences between interest rates between conventional FHA and VA from your realtors?
No, my guess is, they're not daily looking at rates, right? So I feel like my realtors I work with have a good feel for where rates are, whether that stuff I'm sending them weekly just to keep them up to date, or their own recon they're out there doing maybe, because I'm sure they get that question a lot too from clients. What are rates? We're thinking about doing this. I'm not sure that they would know how much better the VA rate is, though, compared to conventional.
Yeah. It's I wouldn't say it's night and day, but it is better. It's better because the VA is guaranteeing that loan at 25% to the lender.
Yeah.
So at the end of the day, the lender is getting more premium that we can pass on to the consumer at a better rate.
Yeah.
So at the end of the day, with a better rate, no MI. It gives them more buying power.
Yeah.
I think a lot of realtors don't quantify that into a higher purchase price, possibly for the veteran. And if they have any exemptions, any disability rating, the funding fee goes away. So you don't have to finance that into your loan amount. It lowers the payment. So there's a lot of positives when it comes to the VA home loan versus a conventional and a FHA if you take out the mindset of the appraisal.
Yeah.
Worried about the appraisal. So at the end of the day, that veteran's going to be able to afford, because you can also even do a higher ratio qualifications on VA. They got the residual income. So there's a lot of things that create that loan to be more affordable, better opportunity to get into from a lending perspective. So, some realtors, I get the question probably once a week, what's a seller concession amount for conventional FHA? But on VA, I think you had a question about what the max is for VA and what can you do with the excess dollars if you already use it.
Yeah. So you actually told that story to me a couple days ago that I found interesting. The what do we want to call it? Loose guideline, general guideline, whatever is 4%, right? Max seller concession on a VA loan is 4%. That's not necessarily the full story on that, right?
Right. So if you go, the guidelines, the 26.7 with VA for concessions, the max is 4% to be paid towards customary closing costs. Anything over and above that 4% concession, if you get it, can go towards other things such as paying off debt. You could advance and pay off taxes. You can pay off a judgment. Anything outside of debt you could pay. So there's advantages of doing that. And the scenario that I had is I had a realtor who didn't necessarily ask me, hey, what do you need to get this done? I just got a contract sent over with, I want to say it was $30,000 in concessions, which exceeded the 4% by about 20 grand.
Yeah.
So what we were able to do with those dollars is not waste it. So we took the 4% and put it towards all the customary closing costs. And then we took the remainder amount and paid off about 95% of their revolving debt.
That's
so
crazy.
They walked into that new home with the mortgage payment, I think very little left on a car loan. And that was all their debt. So they took advantage of that.
That particular buyer takes advantage of the VA program, does 100% financing, gets all their costs covered, title fees, recording fees, the county, state fee, lender fees, whatever you want to call it. That's all covered. That's 4% is normally more than enough to cover that. And also has all their debt paid off, pretty much.
Yeah. Now you can also run that scenario to save a deal.
Yeah.
Because if you have a residual income challenge and you got to be at the certain percentage to meet that requirement to get that to pass, you want to visit with your realtor, say, hey, if I can get X dollars in concessions, I can go to pay that debt, get the residual down, and we're done. We have a clear to close situation. So there's a lot of things about that VA home loan outside of just the 4% that we can go over and above that and make that still work for everybody and get the house sold.
Yeah, I'm not sure that we'll just call it our government does a lot for our veterans well at times, but the VA loan, I think, is a good benefit for our veterans.
Absolutely.
Yeah.
And it's forever. It never expires.
Yep.
So if you got somebody who served, I wouldn't say World War II anymore, but Vietnam, or even now, you just have to serve 90 days of active duty because we're still in wartime, according to the government. So if you're 90 days active service, you can use that VA home loan while you're still active duty. If you're living on a base, instead of taking that military housing income, you can buy a home and use that military housing income to go towards the mortgage payment. So as you're stationed, you can be building wealth through real estate. You get restationed. You can either keep that property as a rental or buy the next one, sell it. So you have a lot of options, even if you're in you do not have to be discharged to use this benefit. You just have to meet the requirements for active duty to qualify to use it.
Yeah. Yeah. Good stuff.
So one thing I want to mention too, you mentioned, how do we how do we educate realtors? How do we get them to understand the misconceptions, understand that the seller's not going to net less if they take a VA offer? What we do, or what I've been doing, I've been doing a lot of classes. We also have a class that we can give continuing education credit to a realtor who needs it. It's a 2-hour class. We talk nothing but VA, from a deep dive to a Q&A to everything. So the intent is to not only educate, but to, debunk what they're hearing out there, because there's a lot of opportunity as a listing agent to market that property using the VA benefit. Because one of the things too is, there's not a loan limit for VA. So if you exceed that county loan limit, if you have full entitlement, you can buy a $2 million property, $3 million property, put nothing down if the lender will allow you to do that size of a loan. But there is no limit on the loan amount that you can do with the VA benefit.
Right.
And still get the good terms, no MI, no, and a better rate, right?
Yeah.
So there's benefits and there's opportunity there to work with the VA community for sure.
Yeah. Yep. And so you mentioned the seller netting the same thing, whether they accept VA or conventional or FHA or whatever. That's one of those misconceptions, is that a seller is going to have to cover certain things for a veteran buyer that they wouldn't for somebody else. Can you speak to that?
Yeah. So what VA protects to the buyer for the veteran is how much they can be charged. Now, if those charges exceed 1% in certain areas of your loan, then yes, it becomes a non-allowable fee. And typically the non-allowable fee has to be paid by someone, either the seller, the realtor, the lender. So typically, how loans get structured on our side of things, we typically don't run into that. But if we do, then we eat it. We waive it. We do a credit. One of the things that I still hear today is the seller has to pay for the termite inspection, pest inspection. No, that's the veteran can pay that. So at the end of the day, the seller really doesn't have to accommodate any closing costs outside of what they negotiate on the contract, owner's policy, survey, warranty. But for the most part, if you do exceed a certain percentage on the charges that are not customary, then you're gonna have those non-allowables that come into play, and then those have to be addressed.
Sure, but
that's kind of where what they're probably doing when they work up the net sheet for the seller is, oh well, that's non-allowable. That's not, you have to pay for that. You have to pay for this, and it becomes a misconception because they don't know how that loan's structured for the buyer.
Yep.
So one of the things we do, what I put into practice is when I know I'm going to have an offer on a home with my buyer who's pre-approved, I have a letter that I'll submit with the pre-approval letter that kind of addresses those concerns and has a few other things about the VA home loan. And I'll pick up the phone and I'll call the listing agent and say, hey, look, this is a VA approved buyer, and talk a little bit about some of maybe the misconceptions that they've heard about this loan, and kind of put them at ease with the seller that, some of the costs on the loan do not have to be paid by the seller. They're covered by us.
Yeah.
Or they're not being charged at all. So it does help. It gives the buyer a little bit more, more leverage, I guess, because if you're going against other offers, at the end of the day, the seller is going to net about the same.
Yeah.
Or it should be the same.
Yeah.
So I know we talked about the misconceptions about the VA home loan. What about Plan B? What could Plan B be? Plan B be? That's a tongue twister.
No.
For down payment assistance. So, they're looking for 100% financing. There are programs out there that do allow that. One of them that we want to talk about is the Empower program for FHA that does 100% financing in the form of a grant. Can you tell us a little bit about that program? Because I know you got a couple of loans in your pipeline that are using that product.
Yeah. So Plan B, you want to buy a house, but you really want 100% financing. You don't have, or you just don't want to use whatever you do have in savings. If you want 100% financing, if I get that call, it's one of the first questions is, are you a veteran? If you're not, obviously you can't use the VA. So what is plan B then? There's USDA.
Mm-hmm.
That's also a loan product that a lot of people just don't know much about. People think, well, I can only use USDA if I'm buying a farm or something like that. And that's not the case. In fact, I'm not going to get into USDA much today. We can do that another day. But I will say that, where I live, Van Alstyne, Texas, everywhere in Van Alstyne and pretty much everything around Van Alstyne qualifies for USDA.
Mm-hmm.
But USDA has income limits. You can't make too much. And that depends on, how many people are going to be in the house and different things. And there's also loan limits with USDA. So that could be a plan B, but there are limitations. This Empower program, the reason I'm kind of leaning on it quite a bit lately is because so many people fit in the box. Because the box is not very restrictive at all. It's an FHA loan program. So with FHA, one of the advantages is it's more lenient when it comes to credit guidelines, where conventional loans can be pretty strict. If your credit's got some challenges in it, whatever, conventional can be tough on you. Where FHA allows for a lot more than conventional financing. So you get the benefit of more lenient credit guidelines. FHA requires 3.5% down, so it's not 100% financing. But with this Empower program, we get that grant that covers that 3.5%. Well, what's the catch? Because a lot of grant programs, they have income restrictions, like we just kind of talked about with USDA. You can't make more than X amount to qualify for that grant, or there's a penalty if you sell that house or refi within a certain amount of time or whatever. There really isn't any of that on this program. It doesn't matter really what you make. You've got a couple different ways you can qualify to have the minimum down payment requirement of 3.5% covered by this grant. And it is, you can make less than 140% of the median income, that means you can make quite a bit of money and still qualify. But even if you make more than that, if you're a first-time home buyer, you qualify. If you are a police officer, nurse, work in a hospital as a janitor, even if you just work in the medical field in any capacity, firefighter, I don't know if I said that one already, any of that qualifies you. And if you don't check any of those boxes, if you are just, if you have volunteered for your kid's soccer team, or you volunteer at your church or do anything like that, you qualify.
Yeah.
So most people qualify. Now, what do we mean by qualify? That doesn't just mean because you're a first-time home buyer, you're like, here's the loan. You still have to income qualify. You still have to credit qualify. We still have to look at credit, but it is FHA, which is far more lenient. We have to make sure that, debt to income ratios and things like that are going to work on the program. But even that's very lenient. As you know, Rich, you can go up to 50% or just about 50% when it comes to debt to income ratios, which is very high for a typical loan program. So with that, where I've had success recently is getting people qualified for that program. It's an FHA program where we're going to help you cover that 3.5%. And the cool thing about it is you are putting 3.5% down. So you have that equity immediately. It's just being covered for you. So it feels from their perspective like 100% financing. But you still have costs. You still have title fees, again, recording fees to the county, lender fees, maybe those things. But we can also use a seller concession to help cover those. So instead of if you're looking at a home for $350,000, you think, well, let's go in and offer $340,000 and see what they say. If you're really trying to get in with as little out of pocket as possible, maybe we go ahead and give them the $350,000 they want, but instead ask for a concession of $10,000 or $5,000 or whatever to help cover those fees. And that's how we're getting people into homes using that program with very, very little out of pocket.
Can I do a gift from a family member to cover the
100%.
closing cost?
Yep.
Okay. Is the gift, or not the gift, but is the grant forgivable, or how does that? There's not a lien on the house, is there?
Nope.
Like some of the other.
No, that's the other thing with a lot of these grants. Yeah, they put a lien on your house, in the amount of that grant or something similar to that. There is no lien. It is a completely forgivable grant. If you buy the house and 8 months later life happens and you got to sell that house and move, it's fine. You don't owe anybody any money.
Okay. So there's no interest running on that grant. at all.
Nope. 100%
Okay.
forgivable.
So if I want to refinance that loan in less than 12 months, between 6 months, I can do that?
The
Just
ask
meet
is
the
that
FHA streamline requirement?
yep. And you can use the FHA streamline, no appraisal required. Don't have to show pay stubs and bank statements and all that stuff again. The ask is that you stay in the home, in the loan, I should say, for 6 payments. And then after that, it's like anything else. If rates drop and you want to refi or you need to sell, whatever, there's no restrictions outside of just normal FHA guidelines.
So with it being a down payment assistance program, does the customer have to go through some counseling online? Do they have to go somewhere like a physical location to go through the class, or can they do it online?
So I've got one going now. They're first-time home buyers, and because they're first-time home buyers, they did have to take a what do we call them, Rich? Home buyer seminar class, home buyer education class.
Home buyer course. Yeah.
Yeah. She said it took about 2 hours. I feel like most people say it takes about an hour, but it's an hour to 2 hours, whatever you want to call it. But you can do it sitting on your living room couch, sitting up in bed at night. You can do it wherever. You don't have to go anywhere to do it. And that is, I believe, just for first-time home buyers using the program.
So I noticed on their matrix, their guideline matrix, it automatically says military personnel. So
Mm-hmm.
this would be a definite plan B option without having to worry about being a first-time home buyer or any of the other things. If you're military personnel, you're going to get 100% financing if you qualify on all the other things
Exactly.
for the program.
Yep.
The only difference is you're going to have a mortgage insurance payment for a short period of time.
Yeah. Yeah. You're going to have mortgage insurance. But, what I'm seeing, everything's gotten so dang expensive over the last few years. And I think that's hurting people's ability to save because there's just not that much left over at the end of the month after you pay everything, and everything's so expensive. So a lot of people, they're ready to buy a home. They don't want to keep paying whatever they're paying in rent because that's gone up like everything else too. And they're of the thought, if I want to pay this much, I should own my own home. I should be building my own equity instead of somebody else's. Let's buy. That is the most common conversation I think I have, especially with first-time home buyers. That's what's driving them. The challenge is they don't have, 50 grand sitting there, 30 grand, 20 grand, whatever it is, right? They've got some money saved, just not as much as they'd hope, but they do want to buy. This program, getting people in, even if you're not a veteran and if you can't do USDA for whatever reason, this program allows you to do essentially 100% financing. And again, you're actually putting 3.5% down. It's just covered by that particular lender. And it allows people to get in. And then, like I said, you couple that with a seller concession, and you can get in with very little out of pocket.
So I want to talk about the client that you have that's going to close, I think, here next week or so.
Wednesday.
Doing this program. They went to a builder who doesn't have any in-house financing, but he was willing to do some concessions on that particular loan.
Yeah, I mean that particular builder, he's a small builder. He builds spec homes pretty much exclusively, so a little different. A lot of builders, you drop a plan, you pick carpet color, you pick this, you pick that, and then he goes and builds it. This guy, he just builds the home. But he's in this guy in particular, he's very good about working with people, and so like that. Those folks that are closing Wednesday, they actually had him change the flooring. He had carpet throughout, and they wanted something different, so they negotiated it, and he took care of that. But the biggest thing that he does to help when it comes to that cash to close piece we keep talking about is he'll give that concession. He's kind of got it. I can't speak to his business model, right? But he's kind of got it built in. He knows he's going to have some expenses to be able to work with people. So like for them, they're coming out of pocket. I don't have the number in front of me, but it's just a couple $1,000s, I want to say. And so, it's basically a rent payment almost for them, and they're in a house instead of continuing.
It's a deposit for a new rent is what it is, right?
Yeah. And with a mortgage, as you know, you skip a monthly payment. So they're going to close on May 7th, and they're not going to have a payment until July 1st. And so that it's almost like they're just paying one more month's rent, and they're in a house instead of continuing to rent and pay somebody else's
a brand new house.
Yep. A brand new house in their case. Yeah.
Yeah.
Yep. And so the
So
benefit of that builder is it might be hard to buy a house for 300, 350, 400, whatever you want to call it, and get a seller to give you 10 or 15 grand. I mean, it's doable. Anything can be negotiated.
Yeah.
But this builder, he can do that. And that's, they're the second people that I've kind of used with that builder because he can do that. People that need, they want to buy, but they don't have that money. And we've got another one I just pre-qualified that I told them about that builder because to make it work, they probably need a big seller concession like that too. And that builder's happy to work with them.
That's awesome because that helps. I mean, that's just when you really dive into the product and think it through for what you could get out of it versus what you have to put into it. If you get a little bit of assistance from the seller, there should be no reason why anybody who's looking to buy a home, first-time home buyer, whatever the case may be, should entertain this product. This is a really good product. It's probably one of the better ones that I've seen where there's no, there's no, what I'm trying to say, things about the second that you have to worry about. It's built in. You can do whatever you want with. There's no payback. No strings attached is the word I'm looking for. So, the other grant programs, even though they're good, right, there are some other restrictions that they have to get to qualify for that. But this should be like product number one for people to look into.
It is for me. I mean, it is the best down payment assistance program I've ever really dove into. I'm sure there's some out there I've not taken the time to read up about. Maybe, I don't know. A lot of these programs come and go. They're out there and then they're gone. After a year or two or whatever. So maybe I've missed some that were just as good. But this one's really good to me because it doesn't have the income restrictions that a lot of them have, and like you said, it doesn't have that second. You're not taking a second loan out on your house right when you buy it to cover a down payment like some of them do. So yeah, it's a solid program.
So one thing I wanted to mention too, when we talked about some of the guidelines on it, but it can go down to 580 on a credit score.
You can.
So your 580 traditional FHA for most lenders is usually at 600.
Yeah.
They don't want to do anything below 600.
Yeah.
Below 600. So at 580, you have to have an automated approval to make that work, or it could be downgraded to a refer after they have it and have it manually underwritten. And if it meets those guidelines for that, then there you go. But at the end of the day, 580 is the minimum score for that qualification if it makes it through automation.
Yeah. I mean, if you have a 580 credit score, we're going to have to take a deep dive into why you have a 580 credit score. There's something that's probably gone on there, some challenges. And so you might have more paperwork to get through. But, if the goal is to get into a house, don't let that credit score stop you if you're at 580 or better, because we can still potentially get you into this program.
Yeah, it's exciting because I think I don't know how long they've had this product like this, but other lenders have had a version of this, but there's strings attached to it. Mm-hmm. So like I said, this is an awesome opportunity to take advantage of trying to get into a home this year, even though, things are up. You can always refinance the home.
Yeah. I mean, I can say the folks that I've worked with, to get them into this program, they're excited. I mean, it's for good reason. I mean, most people when they're buying a home are excited, but and that makes it gratifying for us, right? Like when you work with first-time home buyers that get truly excited about buying a home. I don't know. I mean, for me, that's I don't want to say more fun than working with somebody buying their third or fourth home, but you know what I mean? Like they're people that didn't think they could do it and now they're closing in a week, or whatever. That's fun.
Absolutely.
Yeah.
Because you've helped create a new story and chapter in their life.
Yeah. Yep.
Even though they may forget who Ryan Gibson is 10 years down the road, but they're going to remember, how they bought that home and what they used to get it done.
We're heroes, Rich.
We are silent heroes. We are superheroes in the dark.
Yeah.
So how can folks get a hold of you to talk more about this program? You have a website that goes directly to you.
You've got our website, www.alliancemtggroup.net.
Yep.
I've got a website that's just ryangibsonmortgage.com. My cell phone, 214-763-6394. It's the same number my wife and kids have. You can call me, text me, whatever.
Okay.
Yeah. rgibson@alliancemtggroup.net.
Well, this was good information. Again, my name is Richard Sarey with Alliance Mortgage as well. You can always reach me at 972-948-7473 is my cell. And like Ryan's, it's on all the time. Well, buddy, I appreciate your time today. I will be talking to you soon.
All right, man. I appreciate it. Thank you.
All right. You're welcome.
See you.
Talk to you soon.
If this episode has been beneficial, we'd love to hear from you. Please leave us a review on your favorite podcast platform. Also, for regular updates and tips, make sure to follow our social media channels, which you can find in the show notes. Until our next episode, keep making homeownership dreams come true.